All right, we are live and we'll get started here according to my clock in about a minute. All right, coming to you live from Tucson, Arizona. Welcome to Stock Analysis Friday on this May 22nd, 2024. Hope everybody's doing good out there. All right, so market's kind of flat today. I think it's down 40 points, but when it's sitting around 40,000, it's pretty flat. We're going to take a look at Bitcoin. I want to go over that a little bit. That's come up this week since we met last week. So we kind of want to see if the correction in Bitcoin is over. There is a high probability it is. It has to clear one more key point. I'll go over that with you in just a momento. All right, so let me go through the administrational items here. Those are those exciting things like the risk control and so forth. Also, give us a like, subscribe, share. We're trying to get our numbers up. If you have any ideas to do that, let us know. Maybe we should have like a swimsuit bikini show or something here to get the numbers up. But let us know here what we can do. We're doing pretty well, but we'd like to increase those quite a bit. So definitely help us out there with a like and so forth. All right, now in terms of risk control, all right, you have to be aware of the risks involved in trading the financial markets. Like I always say, there's risk in pretty much everything we do in life, right? But in trading, all right, if you don't use it, you're going to go bust. It's really that simple. You can have a great trading system, but if you don't keep your risks in line, you're not going to survive too long in this business. So it's really paramount. It's as important as anything else we do in trading. And entailed in that risk is actually having a structured system to do it. And you need the discipline to do it. And I do coaching literally all around the world. I've been doing it now since 1998, I guess. I don't want to give away my age, but yeah, it's been that long. And so we've been able to help a lot of people in that area. If you're having psychological issues or you just don't know how to do it right, give us a call, okay? We can help you out with that. I've also written some books on that as well. I'll share for you in just a moment. All right, the other thing too here is, when we talk about stocks or anything regarding the markets, realize that we can't guarantee any of our forecasts simply because we deal in a realm of probabilities. When I give you a forecast, I'll give you something that I feel has a high probability, but it's kind of like the weather, it can change. So you got to keep that in mind. Nothing guaranteed. Don't bet the farm on any one idea, right? The other thing too is run anything we talk about past your financial advisor or whoever manages your money, simply because I don't know your personal situation. And there's a lot that goes into making that decision of whether a trade is suitable for you. So definitely check with them. All right, I think that's super, super important. All right, what else can I say on risk control? Oh, yeah, trade with money you can afford to risk, right? All right, don't be trading your rent that's due in a week, okay? Not a good idea. All right, get a prop account if you don't have the money to trade. Seriously, prop accounts are great, so look into that. All right, a couple books for you. All my books, for the most part, are published by major publishers. The only one I self-published was The Money Management for Traders, second from the right. And the reason I did this is basically I took the the pertinent information on money management, stripped it down into a really concise book that people can buy and implement really on the same day they buy it. Well, I guess it depends how fast you read, but it's not a very thick book is my point. If you want a deeper dive, Wiley Trading had me publish Trader's Money Management System. Excellent book, but that's a deeper dive. That'll take you a little longer to read. All right, now I got Elliott Wave Techniques Simplified, which of course is my book on the Elliott Wave. And this is a form of technical analysis that basically looks at the different swings in the market and applies a probability count to where the market's going. So if you're interested in that, you'll probably see me use that today. That is a great place to go because Elliott Wave can get very complicated. So the purpose of that book was to simplify it. And at the same time, I came up with an Elliott Wave probability matrix in that book where you can actually apply a percentage of the probability of the wave count. All right, so you may want to check that out. All right, Survival Guide for Traders. Let me go through that really quick. And that basically is a book on how to run your trading business with today's technology right out of your home. Now, my next book I'm going to share with you called The Art of Trading on the Far Right, second edition. Guess what, folks? Coming out this year. All right, I finally finished it May 31st. It's going all to the publisher, and the publisher is going to process or do whatever they do, publish, I guess, and get that book to the marketplace. All right, so you can pre-order that. I don't think they charge you anything until it's actually shipped. So, but I think you probably get maybe the best price to order it now. I know many of you have been waiting for that, so the wait is almost over, right? Okay, so great book. That's going to be about, I thought it was going to be about 450 pages, but I actually stretched it out to almost 500 because there's so much material I wanted to cover in that book. It's going to cover many, many of the things that I feel are important for you to become a successful trader in this business, whether you're a day trader, position trader, and it doesn't matter what markets. I trade futures, I trade stocks. We have clients that trade forex, and the list goes on and on. So in any case, the concepts in that book you can apply to styles and time frames of your choice. All right, let me jump into the economic announcements and we'll get along. In the meantime, what I'd like you to do for me right now, I'm going to full size this. So let me do that so you can actually see it, right? That would help. All right, so what I'd like you to do right now is for those that are here, take a moment and type in what you think. I want to hear what real estate is doing in your neck of the woods. When I talk about real estate here, I talk in average generalities across the country, but I'm kind of more interested in knowing what's going on in your particular area. And, let me know the prices. Are they remaining kind of stable or high, or have they come down a little bit? And then also the transactions. Are things actually selling? It's one thing to have all the prices high, but it's another thing if they're just sitting there not selling. So let me know on that. If you have the average number of days roughly in your area, they're sitting there, that's great. But unless you're selling your house, I don't think you're going to have that stat available. Not until you go to Zillow and do a little research. All right, so let's start out today. All right, MBA mortgage applications coming out today. I know that mortgages apps are still extremely low. Existing home sales, all right, are out today. Let's see, petroleum status report, Atlanta Fed business inflation expectations. All right, let's see what else. FOMC minutes. So yeah, that's right. That starts there. That's kind of an important one, right? So, and then on piggyback here, also too, I don't want to tax you too much out there, but type in, let me know what you think interest rates are going to do. All right, over the next, by the end of the year. Let me know how many rate cuts you think are going to occur, if any, by the end of the year. All right, Thursday, tomorrow, we have jobless claims coming out, PMI, new home sales, EIA natural gas report, and the Fed balance sheet. And the rest is just bill announcements. Okay. All right, Friday, we've got durable goods orders. All right, consumer sentiment, Baker Hughes weekly rig count. And that's it. All right, so that kind of sums it up. So FOMC is the big one, okay? FOMC. All right, let me enlarge this so you can see this better there at home. All right, here's kind of an interesting chart I found at Fox Business. All right, inflation over the decade. So they went back to 2010, and you can see it was kind of in 2012 propped up to what, 4%, then came back down. And so the means around, they try to keep it around 2%, which you can see is what they attempt to do. And 2015 was down, wow, really low, and then came up here. All right, went down in 2020, and now it has skyrocketed, got to a high of 9%, and now it's down into that 3.4%, which was the latest situation off that. So, all right, so we're above 2% still, and that's causing a little bit of a problem for the Fed, because what's happening here is that they'd like to lower interest rates. It's an election year, all right? Lower interest rates may spur some housing on and make people more optimistic about the economy. But they're stuck, because originally they said they really weren't going to lower interest rates until they got it back down around the 2% level. And as you can see, we're still above the 2% level at 3.4. So that's a problem. They're kind of, backed into a corner. However, never underestimate an election year, okay? I would not be surprised during the election year that maybe later in the summer, they drop it 0.25%, just to keep things fairly stable in the marketplace. So we'll see, okay, and see what happens with that. But that graph's kind of really good, because it kind of shows you how out of whack we really recently got, of course, on inflation. All right, so let's keep going here. Oh, all right. Now we get into the meat and potatoes of the presentation here, and that's our software, right? So we call this the ultimate trading software. Basically talk about AI. This is AI, all right? It gives you entries and exits based off changing market patterns in the market, whether the price pattern is a trending pattern or not, the software picks that up. All right, we also have scanners, and we also have risk control software. And again, from my saying on the risk control announcement earlier, you've got to have good risk control. You cannot have a trading system without some way of keeping those losses small and letting your winners run, right? So anybody that sells you a system that doesn't incorporate risk control into it, run for the door, okay? You have to have that incorporated inside it. All right, so that's our software. You can, I'll put some links, I guess, on the recording for this, but you can also go to our website as well. All right, now I want to spend a little bit of time here on the Dow. All right, so this is a chart that I do for my subscribers on Sunday, so you're ready to go Monday. For those of you out there watching, you should join the Yummy subscription, because it's A, inexpensive, and B, all right, you get all this information on Sunday. So that's kind of a cool thing. And if you really want to deep dive with stock picks, then you should use our market opportunity report called the More subscription. So we got 2 subscriptions for you, one that has stock picks and one that has general information on forecasting the market for the upcoming week. All right, so I think that's important. All right, so here's the daily chart. And basically, I like to make the distinction that this is a daily chart, because when you look at a chart and you use technical analysis on it, it's important to know what each price bar represents. Is it a day? Is it is it 30 minutes? Is it 60 minutes? Those are called intraday time frames. And there's a time and a place for that. And I'll show you that in just a moment when we look at some of the live markets. But in this case, this is a daily chart. This is kind of your normal standard chart you would see when you go to a, something on the internet with a chart or something like that. Day traders look at different, much shorter time frames than this. But in any case, what we've done is done a couple things on this chart. All right, one thing, we put our logo up here, right? And then told you it was a daily chart here. Now, the next thing we do is we put numbers on these swings. Now, remember I talked about the Elliott Wave, right? Well, this is a form of technical analysis, not to get too complicated or in depth about it, but basically there are 5 waves in a trend. And we are in the 5th wave, very close to the end of it. All right, there's the target. So if the trend ends on the 5th wave, what does that mean going forward after that? A change in trend, right? It comes down. All right, so everybody that's been used to this bull market for quite some time now, when we get to that wave 5 target zone, you're going to have some decisions to make. And this is where you need to sit down with your financial advisor and have some sort of game plan that the market could at that particular point change trend. Now, when is that going to happen? Well, that's the crystal ball nobody really has, right? Things can go on and on and on. We can get an idea, an approximation, but that's usually about what it is. In this case here, when we hit the wave 5 target zone, basically it can end at any time in this range, in this zone. So I've got on here, let me read this number. I don't know if you can see that. It's awful small. 40,281. All right. And we're close. Okay. And the zone goes from there to 47,426. So you got about a 7,000 point spread in the zone from the low to the high. So it could end anywhere in that zone. And right now, it looks like since we took out this high here, that probably we're going to, I think, be in the middle part of that zone. All right. For those of you that aren't on our more report, I'll draw in a specific target for next time, as well as the yummy folks here. All right. So we'll cover that next week. But I think that's probably where it's going. I'm kind of waiting to see a little bit of a pullback there. So I think, since it's not technically in the zone, and by the way, 70% of the time, markets reach that. 15% of the time, they don't. So if you go with the probabilities, I'm going with it getting into the zone, right? 15% even goes a little higher, okay? So that's kind of the breakdown behind that. So I'm thinking here probably we're going to get there sometime this year, but also too, I don't think we're quite there yet. So I know a lot of people, anything can come out of left field too to cause a market to end. So you always have to be a little bit careful. But what the market did for us, which was really nice at this point, is if you look at this low here, okay, if the market trails down and takes that out, that's pretty bearish. So for right now, what we can certainly say, as long as the market stays like, above 37,000 here or 37.5, we're technically still moving up, okay? If it breaks down and goes below that, then we have to take that as a first possibly shot over the bow, so to speak. And then we got to watch these. So these are the 2 points on the market we'll watch going forward to see if they hold. And as long as this first one holds anyway for right now, then we're on our way up, okay? If this one gets broken down here, put your raincoats on, get a hold of your financial advisor, and really take some urgent steps to protect your portfolio. All right, any questions on that, feel free to ask, but I think that's a pretty good, concise, detailed report. Double negative, I guess, concise, detailed, but a good report on this particular market. All right, the 60-minute chart, again, of the Dow. All right, this time each price bar represents 60 minutes. Purpose of showing you this is we're getting a couple things going on here. One is we anticipated the market pulling back to the wave 4 target zone. We got that. Then it cleared the top. So wave 4 is over, okay? And now we're going into the wave 5 target zone here. And this one is right around the 41,321 to 43,000. So that's probably the probable part where that'll end. Remember I said we'll be a little more specific soon. Well, that's kind of it right there, okay? So I think probably more accurately, we should end around 41,325 up to 43,619, okay? All right, so that is that. Again, any questions on that, feel free to ask. All right, now, this is the S&P 500, okay, here. I've got it kind of enlarged. Hopefully it'll clear up a little bit. So this basically is almost mimicking, as well as most of the major indexes, what I just showed you on the Dow. A little different here. So my target on this is around 54,080 to about 5833. That's a precise target. And a more general target would be 5652. All right, to 6988. So this one based on the wave, smaller wave counts, a little bit closer, shorter term. So still got more room to go. And again, what I want to emphasize here, green PTF, we also have that on the Dow too. So that PTF indicator has a 75% probability calling for more highs. So even if you got a correction in the markets, as long as that stays green, you know it's only a correction. And we have the similar situation. I've got the NASDAQ here with the daily and the weekly chart, not even close to its upper category. So my target on the NASDAQ is 18,850 to 24,188 before we go into a long-term correction. Now, when I say long-term correction, that's the same thing as saying a bear market. Okay, folks? So kind of know that. All right, so that's kind of what we're there now. All right, so I pulled this off the Wall Street Journal this morning. Wasn't that nice of them to send this to me? All right, we got home sales fell again in April after the high mortgage rates dampen activity. So I'll read this. Home sales fell in April for the second straight month as high mortgage rates and near record home prices continue to stall the market during the prime selling season. Sales of previously owned homes decreased 1.9% from the prior month to a seasonally adjusted annual rate of 4.14 million, according to the National Association of Realtors. All right, so this is kind of interesting. You know, we have home prices and then we have transactions. And so basically, this is saying prices are coming down, all right, because of the higher mortgage rates. If we go into a recession, so in other words, after the election, the market starts tanking, which we think it probably will at some point late this year to 2025. I don't think it's going to happen this summer unless something happens out of left field that we never know about. And what do I mean by that? I'm talking about some wars type of thing or that develops, a terrorist activity or something unforeseen comes out of left field. That can always cause a problem. We're close enough to the Wave 5 target zone that that's not to be discounted necessarily. All right, but watch those price levels to know if we're in trouble or not that I just gave you. All right, so back to this for a second. So there it is. They're saying home sales fell in April for the second straight month. I'm not seeing that in certain areas like San Diego. All right, still very high. Many parts of California are still high. Many parts of Arizona, except for Phoenix, are still doing fairly well. And so, it's very local, I think. So we'll see what happens. I don't think there's a lot of demand anywhere, simply because of the situation with the higher rates and prices of homes are so high compared to income levels that people just can't do it. All right. So I do think prices have to drop, but I don't see the tremendous drop yet. And, 1.9% from the previous month, that's pretty good. All right, but that's not necessarily a bust in the bubble, even though it is the prime selling season, so to speak. All right, so Case-Shiller index versus the CPI. I show this every week, so I'm not going to beat this to death, but this is the Case-Shiller line in the red, and this is the CPI down here. Goes back to 1970. You can see that. And Case-Shiller, in case you don't know, the Case-Shiller index is basically an index by a guy by the name of Case-Shiller who put it together. And it's the average home prices in America. You can get it for the UK. You can get it for pretty much anywhere. But this represents the United States. And so the CPI under that is Consumer Price Index. All right. And that represents inflation. So you can always see the Case-Shiller, which represents average home prices, have maintained an advantage over inflation. And that's why real estate is a great investment. And that's why people, for many reasons, it's, the tax incentives and so forth. But basically, real estate has always held its own against inflation. It's doing it right now. Okay. The only problem is when you get these bubbles, which are represented by the distances away from the CPI that are extreme. So this was the financial crisis. Everybody remembers that. All right. And so the market sold off, recovered, got rid of all the bad mortgages, and up it goes again, lower interest rates, blah, 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 blah. All right. COVID, the whole 9 yards. Okay. So now we're sitting at an exorbitant level. above the CPI. And you can see the CPI, which represents inflation, started kicking in 2020, right? Okay, so, and it's still going up, but so, you know, home prices are leveling off or at least still keeping up with that. You know, look at this. You can't really say that we've had a bubble bust by looking at this chart. You just can't say that, right? So here we are, you know, sitting tremendously higher than we were during the financial crisis from the CPI. Look at the distance from this. That's about 40% would have to come down minimum to get in line somewhat with the CPI. So that worries me with real estate. And it's the same with the market. You know, you can be in a bubble, both in stocks and real estate at the same time, of course. But the problem is that the bubble can last a while. And usually something causes it to crack. Now, what could that be? All right, well, certainly not the high interest rates. So it's causing people to stop buying, but it's not causing the prices to go down because of the supply and demand issue. So we're going to need something else. All right. And I think that something else may be a recession coming in at some point, or something out of left field could cause the markets to sell off, both in real estate and housing. But the thing is here, all right, if you look at the chart, all right, you have to acknowledge that we're in a bubble and bubbles burst. So you have to realize that probably is going to be the scenario coming out pretty, you know, within the next, who knows to say. Bubbles can last years, okay? And this one's already been bubbled for quite some time. But I know from real estate, I used to have a real estate brokerage, all right? And I know from real estate that when it turns, it's quick, all right? It goes from, it can turn on a dime and then you have a liquidity problem and you can't get out. It's not like stocks where you can sell it at some point during the day. You cannot sell a house or a piece of property quickly. So it's kind of considered illiquid a little bit. All right. So, you know, just food for thought. Okay. The real estate bubble will burst at some point along with the stock market. All right. Let's keep going here. All right. I guess that's, is that my last chart here? Okay. I think that's it. So let's go ahead and close this and take a look a little bit at Bitcoin here. How many people out there own Bitcoin? How many people out there own Bitcoin? All right, so on Bitcoin here, all right, I think we may have a bottom here. All right, we had a bottom, just touched this retracement area here, which we were anticipating, and then sprung off it. So that was pretty good. And then we got above this level here, we've got here. So in terms of what we're looking at for those Elliott Wave folks, this is a 3. All right, this would be an A. This would be a B because it did not breach 3. And then this would be probably a C. All right. I was thinking C had the possibility of going down a little further. All right. But there you have it. Okay. So if this thing can get above B wave, I think we're going to 87,274 up to a high of 106 on Bitcoin. And this would be a wave 5. Now, after the little I've taught you on the Elliott Wave today, what happens at wave 5? The trend ends, right? Okay, so when we get up into that range, all right, be careful, all right? Keep your stops fairly close if you're in this to trade the daily chart. And, you know, look to get out if it reverses. I mean, that's what I'm going to do. I'm a trader. That's what I do, okay? If you gave Bitcoin to your kid and you said put it under your pillow, don't look at it for 20 years, then you're not going to worry about stuff like this, right? But for me and for other traders out there, this is what I do. Okay, so it looks like it's going to go up. I think to that range, we've got green here, green here. There is a small probability, it's not the highest one now, that we could go back into this target area here and then go up again. I've seen that happen. All right. Very hard to forecast. All right. Because it hit the target zone. We've got a green owl here. PTFs are all green. So we're getting the high probability signal that we're on our way to new highs. All right. So just showing you that. And, also too, same type of thing for the ETF called GBTC, which is the exchange traded fund for Bitcoin. So if you cannot buy Bitcoin, for example, in your IRA, then you can get it in here, and you can see a similar type of pattern. It's all heading up. Okay, so I anticipate these things, and that red line I have there is where I needed it to cross to kind of increase the probabilities that we're on our way. So that's kind of cool. All right, silver. All right, I want to take a look at just a couple quick markets here before we end. And silver hit our target zone. All right, we still got green PTF, so it's not done yet. Okay, it made a new high, and it's going to go higher. Okay, so hopefully you got into this early because you came here or watched Stock Analysis Friday, which is on every Friday as well, where we look at individual stocks. But this one was, and if you subscribe to the More Report, it's in there too. But this baby's on its way. Okay, on its way. All right, I want to show gold here. All right, let's take a look at that. And if you have any individual stocks for me to look up, bring them on Stock Analysis Friday, okay? I usually don't do that here. It just takes too much time, and we're already at the half-an-hour mark. All right, so GLD, gold, also green PTFs on the longer time frames. We're probably due for a little bit of a pullback at some point. Notice the bearish divergence for all you technical geeks out there that love this stuff. We're getting the bulb here, the hook. So I think we're going to come down on gold for a little bit. All right, I would not be surprised if we get some form of a retracement here. Question is how much. Still got a very strong howl on the weekly, so I'm going to use a closer point for that. So maybe something in that range there of 209 to 199 before the trend resumes. So this is not a big change in trend. I call this profit taking and so forth. Okay, so that kind of thing. All right, let's see. I looked up Bitcoin, gold, silver. What else is there to look up? I think, oh, UNG. That's the other one I wanted to look up. So UNG is the ETF for natural gas. All right. Oh, and I want to look up crude oil too. So this is one that's moving off its bottom. And as you know, I put this on my buy list several weeks ago. And so it's moving up accordingly, and it's not done yet. Okay. You might get a pullback here, but this is just looking really, really beautiful here. All right. USO, let's take a look at that one, the natural gas one. All right. And this is not natural gas, it's crude oil. Sorry. All right. Crude oil is pulled back to its short-term target zone. Still red on the owls, which is our histogram here measuring momentum. We still got another leg down, I think. So let's see what happens with this. If you're thinking about going into this, I'd wait a little bit. We can take a look at that next week, okay? So USO still pulling back. My overall target, my bullish target on this after this pullback, we should get to around 100 to 124 on oil at some point, probably, later this year, maybe later this summer. All right, so keep that in mind. All right. All right. Let's see what else here. Frank, I'm going to look up. That's right. That one's not. That's ETH. That one doesn't load. Okay. I don't think so. All right. So let's see. I'm not going to look up any individual stocks. All right. Let me just look up. Let's go look up at the Qs here for a real quick here on the NASDAQ. All right. And as you can see, this pulled back to this retracement area and then took off. I got to tell you, fib retracements and extensions, very powerful. Okay. We incorporate that in with our software. And our software is these triangles for pattern recognition and the indicators below. Okay. So basically, that keeps us in the know, so to speak. All right. So you're welcome, Frank. Okay. Good to have you here. All right. Well, that's it. All right. So again, I think the bull market is got some more legs on it, but eventually it will end later this year. But I don't think you have to worry about it for right this week, so to speak. All right, Bitcoin, pretty excited about Bitcoin. I think that I was wondering if that bottom was going to be a fairly close bottom or one that was going to be a little deeper. It looks like it's going to be a close one. So I think the correction has a high probability of being over at this point. All right, Jean is saying, I'll show you what she's saying. Thank you for joining us today, and give us a like. All right, thank you for joining us. Give us a like. Okay, so there you have it. All right, and I'm trying to think about anything else here, and I think that's it. All right, so if you're a client, don't forget to come to our client support webinar, which is what, 25 minutes from now. And basically, the client support webinar is for anybody that has either purchased software from us or any of our courses or are in our subscription services. And the purpose of that, I hold these once a week. And the purpose of these is so I can get in front of you once a week for those that are our clients and talk to you about any issues you may be having, share some educational content, and so forth. So I always try to have something to talk about each and every week on the educational front, as well as if you have any pertinent questions on the software or some of our courses. So that's kind of why we do that. All right. Once again, I thank you for coming. All right. And give us a like. We're trying to get those numbers up. All right. Any help we can get from you guys, that would be great. But, you know, we really don't do it for the numbers anyway. We're going to do it regardless if we get 3 people here or 3,000 people here. All right. It doesn't matter to me. Okay. I'm here to give you good, solid information. That's what's important to me. All right. I know a lot of our competitors, you know, they hire these firms to get as many people as they can. And I get that. Okay. But I'm really more grassroots than that. Okay. So we'll see you back here next week. Have a great week, and summer's coming in, so that's kind of nice too. All right, so I'll put a little music on. We'll go ahead and end here pretty soon, and see you next week.